Good morning. This is Japanese Economic Review Channel. Today, we review the global markets from yesterday, Friday, August 7th, 2026. The Nikkei 225 ended slightly lower at 65,606 yen, down 76 yen. However, Topix demonstrated resilience, rising 19 points to 4,074 and marking its fourth day of gains. This divergence occurred as the NY Dow snapped its six-day winning streak on Thursday, dropping $464 on rising geopolitical risks. Today, we will explore this market divergence and the underlying sector rotations. Let's trace the event chain from yesterday. Tensions in the Strait of Hormuz sparked supply fears, pushing oil prices up. This triggered immediate profit-taking on a record-high Wall Street on Thursday. On Friday morning, this risk-off sentiment hit Japan, plunging the Nikkei by 1,031 points. However, at 2 p.m., Fujikura's outstanding guidance upgrade served as a game-changer, reviving non-ferrous metals and erasing most morning losses. On Thursday, August 6th, U.S. markets faced headwinds from the Middle East. Reports that Iran would block U.S. and Israeli vessels in the Strait of Hormuz raised supply fears, causing NY crude oil futures to spike. Since the NY Dow had recently hit consecutive record highs, this geopolitical tension triggered widespread profit-taking. Major indices fell, with Boeing, Salesforce, and Honeywell leading the decliners as investors reduced risk exposure. Back in Japan, the Nikkei faced intense pressure yesterday morning, plunging 1,031 yen to 64,651 by 10:42 a.m. due to AI stock weakness and a soft Korean Kospi index. However, the afternoon brought a dramatic pivot. At 2 p.m., Fujikura upgraded its earnings forecast, igniting massive buying in non-ferrous metals and infrastructure. Active dip buying helped the Nikkei erase most losses, closing in an immense 10.89 trillion yen trading day. The sector heat map from yesterday's session reveals a healthy market rotation. Despite the Nikkei's slight drop, 939 stocks rose compared to 582 decliners on the prime market. Heavy selling hit 11 sectors, including machinery, construction, and securities. Meanwhile, 22 sectors advanced. Oil and coal surged on rising crude prices, while defensive names like Nintendo and Bandai Namco gained ground, proving that capital is actively seeking safer havens. In the startup space yesterday, the Growth 250 index edged up, though overall activity was quiet due to weekend positioning. We observed highly selective buying rather than broad market interest. Go and MTG gained solid ground, while Terra Drone and QD Laser weakened. Notably, the recently listed self-driving Pioneer Tier 4 declined sharply, indicating that investors are prioritizing immediate fundamentals over long-term growth stories. Finally, we look at several corporate announcements from yesterday. F&B saw fresh launches from Yoshinoya, Ibara, Umios, and Morinaga Milk, proving steady domestic consumer demand. In tech, ExaWizards introduced OpenAI's Sol, Terra, and Luna models, while Toradol launched real estate AI to find prime locations. Additionally, NEC announced strategic business sales, reflecting proactive corporate moves despite the macroeconomic fluctuations. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.